Welcome to Fintech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. ACH is anywhere from 1 to 3 days. Wire is hours. Got RTP and FedNow, still not sub-seconds.
We're close to $1 billion locked into this network for payments back and forth. You can transact with a stablecoin in that 0.38 seconds.
Got both these card brands and saying, we're doing this, we're doing this, we're doing this. That in itself tells us we're at a tipping point.
Early users were totally fine getting your hands dirty. Usually a few hours and we can have everything up and running and well connected.
Graham's got over a decade in this space and he's contributed to Bitcoin Core, worked in engineering roles at Salesforce, and solved the same issue that slowed everyone down.
A peer-to-peer network, unlike a Visa, unlike any other blockchain. The Lightning Network itself is going to be incredibly powerful moving forward. Better to get on that train early than be on it late. So,
you're building a fintech product. You want to offer digital assets, but wallets, that's the hard part. Security, compliance, key orchestration, blockchain integration. That's why fintechs, payment platforms, and custodians choose Defense. They provide wallets as a service that's API first, multi-chain by design, and secured with MPC. No single point of failure. So you can launch across over 50 blockchains, automate policy controls, and stay audit ready without managing private keys. Stripe's Bridge powers crypto payments through Defense. MoonPay scales wallets securely with Defense. Sphere grew without compromising on control or compliance. Even major FIs like Fidelity, ABN AMRO, as well as custodians like Zodia and Tungsten trust Defense to power their on-chain infrastructure. Developer ready, compliance approved, production grade from day one. If you're building in payments, exchanges, OTC desks, market makers, or DeFi, Defense wallets work the way you need them to. Request your demo at fintechconfidential.com/DFNS. Defense, secure wallets built right. Welcome to an episode of Web3 with FTC, a Fintech Confidential series. And if you're asking how blockchain, crypto, AI, or even quantum computing fits into your business strategy, this show is built for you. We talk with the builders and decision makers who are doing the work. You'll hear smart conversations, straight insights, and no filler. Whether you're a founder, an executive, or just trying to stay ahead, this is where real talk meets real tech. We keep it practical, we cover the shifts that matter, and you'll get the signal, not the noise. So let's get started. Today, we're bringing on someone who doesn't just build with Bitcoin, he builds for builders. Graham Krizek is the founder and CEO of Voltage, the largest Lightning Network infrastructure provider that is used by the leading fintechs to power fast, low-cost payments. Graham's got over a decade in this space, and he's contributed to Bitcoin Core, worked in engineering roles at Salesforce, and solved the same issue that slowed everyone down. There was no easy way to build on Bitcoin. Graham, welcome to the show, my man.
Yeah, thanks for having me on. Excited to be here.
Here's why this episode matters. Graham doesn't just lead with hype, which you'll find out. His work speaks for itself. He's been there since the early days, contributing to Bitcoin's core code and building infrastructure that actually gets used. And during the pre-show, his take on stablecoins just hit me a little different. Stablecoins left Bitcoin, and now they're coming back. Graham, before we dive into the core themes of today's show, I would love for you to give us your take on how you got here. You've been in the space for over a decade, from the early days in Bitcoin, now running Voltage. Walk us through your fintech background and what shaped your focus in this space.
Being interested in Bitcoin in about 2012, and I was really fascinated by it from the technology side. So what you could do from permissionless peer-to-peer payments anywhere in the world, open 24/7, all of the things that was just fascinating to me from the technology itself and what was being unlocked and what it could actually uncover for the world as more and more people built on it, as more things were being made possible. So that's basically what just got me started. And then it was a hobby ever since then. As I work kind of day jobs doing other things, decided to start Voltage, increase adoption of Bitcoin and provide that as a service, which, at the time when I started Voltage, there was basically nothing nothing. Everyone was off to their own devices. Everyone had to figure out how to do everything themselves. And I thought we really need something different to really grow Bitcoin into what we all wanted it to be and hoped it to be.
You've watched this grow up from the days when it was this, like you mentioned, that little niche experiment where everybody was trying to figure out how to use it and how to leverage all that technology. And now, I mean, we see it powering enterprise-grade infrastructure. What would you say is the biggest change you've seen from when you got started to now, and would you consider it mainstream?
It's definitely becoming more and more mainstream. There's more and more studies of showing people that at least own Bitcoin or cryptocurrencies in general. That is just steadily growing over time. And so I think that that's super great to see it being just more recognized, where at the beginning, when I started Voltage, it was only terrorists and drug dealers and all of those things that we all have heard about before. Now you get less and less of that. Completely different realm today. And so I think that that's also a sentiment to quote mainstreamness, is really just figuring out like how people, the way that people understand it, just an everyday person on the street. I do think that it's absolutely been interesting to see the shift in the sentiment around Bitcoin, as we see in the early phases where there's websites where you could just go to the website and get like 100 free Bitcoin, because it was the faucet websites where you could just click a button and get a bunch of Bitcoin sent to you. And it was just very much an experiment thing to play with. Or now we see people like BlackRock, like launching an ETF that is all built on Bitcoin. And so for their entire portfolio, absolutely massive. And I think they're just increasingly growing their Bitcoin exposure. So yeah, I mean, absolutely.
Everybody hears about Michael Saylor and what he's done over there. And then you have a handful of other folks who've just packing it in and using it as an asset to leverage. But that isn't the only place that it gets done. And a lot of times we talk about BTC, the actual unit of measure, or the Satoshi as the measure. There's a lot of things that are built on top of that chain. You spent time with a darling of Silicon Valley at Salesforce, right? So everybody knows one of the companies that made Silicon Valley, right? And what was it about Bitcoin that pulled you away from that traditional software path and made you decide, like, I need to build on these rails for the next generation of finance and money?
I guess there's two sides of that. One, from like what I saw as the opportunity for Bitcoin in general and like the place that it can have in the world. Early adopters really saw the potential of the impact that it can have in the world, both from like the efficiency of like, man, who wants to wait 5 days of like open bank hours, like to be able to like send payments, like the just kind of the archaic nature of the traditional financial system, what Bitcoin can do, what I saw the potential of it solving inside of that. And then also on like the individual kind of opportunity side, people that are like globally have very hard times accessing traditional, the mix of those two things of what it could do from enhancing the efficiencies of what we just see in the traditional financial system, as well as helping these individuals that have had a hard time getting access into traditional financial products. Mixing those two things with like, man, it's either now or never. I'm either going to start a business right now. I'm not going to start it when I'm 80. So like, now's the time to go and do this.
You mentioned something that comes up a lot of times when I'm talking to any of my friends in the digital asset space, that it democratizes a lot of these things. It gives people access to things that it does that they normally wouldn't have access to. Does this help people cross that digital divide easier, or does it widen the chasm?
We're working on things to accomplish more of that, like Starlink, for example, where you can get like internet into places that just never before would, like you can't run cable out into the middle of nowhere or whatever. And so I think that things like that are helping decrease the digital divide so it is more accessible. So I think that that's going to help a lot. And then I think even, talking about, I think there's the difference in like the digital divide. And then even then, if we solve that traditional finance, that doesn't instantly get you access to the banking rails. And then you still have a big, big hurdle to jump over after that, where at least with like Bitcoin, if you can get over that digital divide, you have access. And I think that there's increasingly new and different ways of accessing Bitcoin. Like there's like kind of paper versions of like a paper wallet that is like, there's ways that it's helping bridge the gap, and where it's not 100% digitally native ecosystem or community, especially as we see more and more digital access happening across the world.
One of the things that I think about is I got introduced into digital assets. Bitcoin was the very first one, right around 2000, about 2012, 2013. It was like over the cusp. I think it was actually over the Christmas holiday break when all the businesses slowed down. I heard about it, so I started doing a whole bunch of research. But back then, it really felt like doing anything with it was more of an art, an interpretation of things, and less of a science and infrastructure type play. And back then, it was just you were in the terminal, you were going directly into the block, and now we start to have more of a API native. Help me understand your thought process as you ran into the technical difficult roadblocks, and how did that shape your vision for Voltage, and what are some of the gaps that you saw that maybe others missed?
You're absolutely right that was back then. That was very much how like the early users were totally fine with this really rough, like getting your hands dirty. There's a limited subset of people that are going to be interested in doing that. And so that was something that I saw as just hurdle after hurdle. You had to really want it. You had to really get your hands dirty to make that happen. I think that there would be so many more people using this technology and building on top of it if it was just easy.
How did that guide you to building out Voltage?
First and foremost was like Bitcoin Core is like the software that most people use to like interact.
Which you've contributed to.
Yes,
so you've got some insights, I guess you could say.
Yeah, exactly. And like it was like, and that was one of the advantages that I had is I'd worked on kind of the system before. So if you wanted to start with that, you had to like build it from source. No one's going to want to do that. And so the Lightning Network being the next step of like the scaling solution for Bitcoin, solve this thing so people can just get up and running faster. I mean, that was the thing. It's just time from 0 to 1 needed to be like minutes, not like hours or days.
You didn't just quit your job and start Voltage. Like it was a side project for a long time. Help me, like, take me back to that time when you're like, hey, this thing has some legs. Mm-hmm. This is something that, take us back to that moment when you're just like, threw caution to the wind and went full speed ahead.
Yeah, it's just like this project where I was like, hey, I have this problem. I think other people might have this problem too. So like I started writing, like switch from building this project to like writing code to build this other new product to help solve this other product. And so just was kind of playing around with that nights and weekends thing. And as I continue to build on it, I'm like, man, I think that this could be actually really, really impactful. And that's when I was like, okay, I'm either going to turn this into a company and do this thing for real, or I need to like find something else to do, because this is starting to get like kind of out of control with the amount of like all the sweat hours I was putting into it. I got it out there, and then people started to use it, and it was just kind of like inside of the community, people were very interested in using it, and we got like a decent amount of customers just kind of organically. The ball kept growing. Yeah, it's like now or never. Like I need to either jump into this or I need to get off. And I think that really that those early users of people starting to use it and really enjoying it was like that was the fuel I needed to be like, okay, we're going to jump into this. We're going to do this for real.
Was there one particular customer client that came on? You're like, if they come on and they start using this, we've got to turn this into, air quotes, a real company. Was there a point or a customer that you're like, yeah, I guess I better go do the business stuff? Support provided by Skyflow. What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
Thunder Games. So I know Jack, their founder, pretty well. They're a gaming company. They were one of the first users of it, and they like very quickly moved their entire like kind of production workloads onto the system. And that was like, man, like I'm like this is like a real business relationship. Like I'm on the hook for like their products and what they're building. And so that was like ultimately like, yeah, like, okay, I need to like, now, like, I really need to go all in on this because, like, their business is depending on me now. I can't be like, hey, I'm going to take a vacation, talk to you later. Like, we got to actually support them. And so that was an early customer that I still have a great relationship with today. When you're an early stage company, things like that just really help you catapult to the next level. It was great when we started. It was very like niche Bitcoin developer ecosystem, which is great. We captured that pretty well. But there's also like, okay, we need to make this a really large, sustainable business. And so we need to invest in the sales, marketing, all those resources to help really grow it into the next level.
One of the things that you and I talked about when we were preparing for this is most people think of Bitcoin as something you hold. You buy and you hold. Kind of like a digital gold. And I hate to bring that up, but that's what a lot of people look at it like, right? But it's actually being leveraged to move money across borders faster, most of the time cheaper.
Yeah.
But let's dig into the sorts of things that are driving that shift and what most people still get wrong about using Bitcoin for payments. What do you see as the biggest misconception about using Bitcoin for payments?
The biggest misconception around that is just the speed and the cost. Basically, what's been holding Bitcoin back from the payments world for so long is it takes time, like 30 minutes, an hour for like confirmations for you to have a surety that the transaction really went through, and then paying the minor fees for these transactions, which could be a $5 fee on a $5 payment. Who wants to pay a 100% fee? Like no one wants to do that. Those are the things that have been holding it back. And that's exactly what the Lightning Network solves for, which is the thing that we focus the most on is the Lightning Network. And so that enables us to now also transact the same Bitcoin, the same assets, but doing that in like less than a second, less than half of a second transaction times, and for 0 to very, very low fees. People are starting to have to kind of break their mental models. And that's one of the hard parts in today's world is we're very focused on like the investment side of Bitcoin, the ETFs, Bitcoin Strategic Reserve, like all of these things that are very investment focused. Also, the cheapest, fastest way of moving value in the world and the entire crypto ecosystem. And so we can't just let that fall to the wayside. That's something that we're working on, is bringing that more into the forefront of it being not this slow, clunky digital rock. It is something that can actually do so much more than that.
As I talk to a number of folks about using Bitcoin and other digital assets for the movement of value, I'll just call it value, because if we say dollars, we say whatever currency it ends up being, in their mind, a lot of times they think the moving of the digital asset is the expensive part. It's not. The most expensive part in most cases, at least from my experience, and I'd love to see if you have a different experience, but is actually the off-ramping, getting it off of the chain and into the TradFi, traditional finance route, into the financial institutions in that domestic currency. It seems to be that's the biggest place that the friction and the cost really has moved to.
As one of the hardest parts is the on-off ramping of Bitcoin into the local currency. And I think that that's something where we've seen stablecoins being really, really popular to help, where you don't necessarily have to off ramp into your bank account. You can off ramp into a stablecoin or something like that. I do definitely agree with that. And that's where we've seen people using Bitcoin as a means of transferring value globally. But when you have the on-off ramp from like dollars into Bitcoin, send it to France, offload like into the local currency there's a lot of fees involved on the in and out. And so you kind of lose a lot of those benefits. And so that's where we're really excited about the stablecoin use case coming into play, that I think will really help make more sense of that and make it more seamless experience.
Stablecoins, they started leveraging the Bitcoin chain because of the things we just talked about: speed, cost, timing, difficulty, all these things they left. But you and I were talking, and it seems like there's a resurgence or a return back to the Bitcoin chain. Why do you think that's happening?
One, it's the reputation of Bitcoin. It is the largest by market cap. It is the most secure crypto asset that has existed ever. And so being able to do these stablecoin payments on top of the highest security, most trusted network is something that is very highly sought after, especially more traditional financial companies coming into the stablecoin space for the first time. That gives them a lot of assurance than like some random chain that they've never heard of that's like based out of China or something. Like they're like, yeah, we want to have all these stablecoins can be on Bitcoin and then into Lightning. That we're focused on is making a blockchain that is high speed for payments. Lightning is made specifically for high frequency, fast payments that are very, very cheap. And so that's why we see a lot of interest in that space, is because of those two things, the trust and security, and then the speed and the reliability.
A lot of times when people start looking at speed, they always compare everything against Visa, but they have the ability to process 65,000 transactions per second. Where does Lightning fall on that kind of a scale?
Yeah, a lot of people point to that kind of metric. That's kind of the benchmark that a lot of blockchains are trying to hit, is like, well, we got to beat Visa, which is like, that's
where
a good
Solana went, right? Solana went straight, like their number is exactly the same as Visa. Geez, I wonder why. But do we really need that many TPS? I mean, I think the average day on Visa is like 7,000 TPS. It's like 7 to 10,000 TPS. Do we really need 65,000? But going back to like, where help us understand where the Lightning Network falls in the chasm between the 7 a second, you've got 65,000. Where does Lightning fall in that gap?
Yeah, so I mean, so like there's virtually no upper bound in the amount of like transactions per second Lightning can do, and the reason for that is that it's a peer-to-peer decentralized system, and so there's not like with Bitcoin, Solana, anything that any blockchain that you want to mention there. Everything has to go through a central point, which is the blockchain itself. All the validators or miners or whatever it is to validate all the transactions. With Lightning, it's peer-to-peer. So it's only me and you need to complete our transaction. And then someone over, our neighbor, only needs it between them and their counterparty. And so all transactions are purely between the sender and the recipient. And for that reason, there's no global state. Like even in Visa, all of the Visa transactions have to go through the Visa database and the Visa APIs and like all of the things that exist inside of Visa. There's really not necessarily an upper bound to the amount of transactions per second for the global network. You're really limited by like how fast can your computer or your server like actually dish out these packets and things like that. Yeah. But just given the way that it is a peer-to-peer network, which is unlike a Visa, unlike any other blockchain.
One of the huge benefits of a decentralized system, you have the ability to scale pretty much infinitely. This is one of the big reasons why we've seen such a huge surge in the Lightning Network adoption. Coinbase, Kraken, Nubank, most of the emerging platforms are going all in on it. I know you talked at a really high level, but let's get like specific. Maybe a new customer, a new client said, hey, Graham, this is the reason why we chose Voltage, and this is the reason why we're going to be leveraging the Lightning Network.
A lot, like virtually most of the largest exchanges out there have Lightning integrated. Binance is another one to add to that list. Very large exchange. Everyone knows Binance. People are adding in Lightning to exchanges like that because it's just an all-around better experience for their consumers, which leads to increased user adoption, more activity on the platform, more traders, all of those different things. So we see that as companies, exchanges doing a lot of integration.
So a single hop payment on average is settling in just 0.38 seconds. I mean, I came in to Fintech through the credit card side of the house, and we were happy when we completed a transaction in 3 seconds. Now, mind you, that 3 seconds was just getting the approval. That doesn't include the money getting moved or the value getting moved and being in somebody else's hand to be able to be used. That could take days. Yeah. And we're talking about in this particular scenario, that value to be able to be moved and to be utilized in 0.38 seconds. That is huge. That is so huge for something like that to happen.
Yeah, it's a great call and a great comparison. And that like people feel like when they go and pay for something with like their Visa card, they tap it, they swipe it, whatever. It's like that feels instant. Well, that's like, there's nothing instant about that transaction at all. Like Visa just says, hey, we're okay for right now. It's going to be days until like the money is an
IOU.
Yeah, it's 100% IOUs. And so it's not even a comparison where you're talking about that Visa transaction takes days to get to where it needs to be, where this is like 0.38 seconds. That is irrevocable. That is 100% final. That money is in that person's hands. Like there is nothing you can do to claw that back or anything. Like everyone is good, transaction done. And so to compare, let's say 5 days with a Visa transaction from card to it's in the merchant's bank account. I mean, like those are not even the same ballpark. Like that is just so much different. And so that's the kind of opportunity we see, like that we see businesses starting to adopt is you can do different things from a business model perspective with transactions that fast.
ACH is anywhere from 1 to 3 days. Wire is hours. All right. It's hours. Now,
Yeah.
mind you, we've got RTP and FedNow in flight, and that's brought it down, but we're still not sub-seconds. We're still multiple seconds. So it's not really real time. It's just more real time than ACH. So we have to keep in mind that there are many layers of the instant real time payment area that a lot of people don't think about. And the network, it's not like we're talking about moving tens of thousands of dollars, hundreds of thousands of dollars. As of January 2025, $509 million in public Lightning volume has happened. And when I say public, this is a big piece, right? So you can think about JPM has their own coin that they use to move money around the world in their infrastructure. This is on the public channel. This isn't some private channel. There's so much to be said for that because it's running across over 16,000 nodes, well over 75,000 active channels. Just going back to the decentralization we talked about, that's a lot of money to be moved. Take ownership somewhere in the middle.
And in our estimations, about close to the same amount on the private side. So kind of unannounced, like non-public data around like the amount of funds there. So we're seeing, close to $1 billion like locked into this network. That is not one-time use like things. You can use that $1 billion of liquidity for payments back and forth. And so the pump is primed. Like it's just ready to go. We just need to incorporate the technology and start to use it for this kind of stuff. So it's been very interesting to see those numbers continue to climb over the years.
So you've been quoted by saying Lightning isn't a niche tool, how money will move. I'm looking at, 650 million users on Lightning globally. What's your vision for the next wave of adoption, and how close do you think we are to seeing maybe Lightning as being the default digital payment rail?
The regulatory landscape is becoming more and more friendly, just like the OCC, just like last week, I think it was, kind of publicly stated banks can hold cryptocurrency on behalf of users. And so that was an enormous shift from what they were saying earlier.
And we covered this in our April 2025 recap that now like the banks had to say, Father, may I please hold Bitcoin, or may I please do this with digital assets? They used to get an approval, and now that's been rescinded. They don't even have to do that. They just have to follow the best practices. And then the regulatory side of the house, like you just mentioned, all of the acronym agencies at the federal level have basically just come in alignment where they're all like, yep, we'll agree with that one. We'll agree with that one. That will agree with that one. Who would have thought that the OCC, the FTC, and the FDIC, and I know I'm leaving like two more out,
SEC,
would all agree on anything?
Yes, yeah.
And we've agreed to that. Plus, we've got the Stablecoin Act that's being worked on right now. I think as the day that we're recording this, it looks extremely positive in that. So yeah. You're right. The direction on the regulatory side has really made a lot of traction.
No one wanted to touch it. Now they can touch it, and okay, cool. Let's figure out how do we incorporate this and make it part of our business. So I think that we're just like this month starting to see that become a reality. So we're early in that, but it's also like really, really exciting that we've seen more businesses, more TradFi like businesses starting to incorporate crypto more and more. So I think that's it's going to be an evolution of, there will be a lot of like crypto adoption. And then as time moves on, I think that there'll be much consolidation into what is the best way of doing it, which we believe will be the Lightning Network as more and more, as people start to experiment with a lot of different things and see the value of it. And so there's going to be a lot of integration across the board, and then there will be consolidation once people figure out what is the best thing for what we're trying to do.
What makes me start to think about is going back to our discussion about it being the bits and the bytes and the ones and the zeros. And now it's really started to get to the API first, that machine-to-machine API first. I'm really looking forward to seeing what communication methodology transpires when we start throwing AI in place and using agentic type stuff. But that's for another day at another time. But my brain goes into, okay, what's after APIs? What do you see as the thing that sets you apart from the other, I'll call them backbones for for Lightning and Bitcoin payments?
Yeah, I mean, I think that we're the first to really do what we're doing. So we've had like kind of a long time to figure out what is the proper way of doing things. So I think that our team is very uniquely positioned in being the best out there for how do you incorporate Lightning into a business, and how do you do that successfully, and how do you make it resilient and high uptime, all of those things. We work with our customers on is really figuring out how do we incorporate this into your business to be successful. And so I think that that's just one of the big things of not only the technology and the experience that we have as a team, but also being able to really focus on how can we make this maximally impactful for the customer.
It's not that it's making the Bitcoin chain move faster, but what it's doing is it's taking snapshots and it's using multiple nodes to really manage the volumes, as you talk about that peer-to-peer. How important is it to be able to rapidly create the nodes? How important is it to have more frequent snapshots of the chain? How should people be looking at Lightning Network providers to make sure that they're not getting left out in the cold in some of these transactions?
Ultimately, if you're moving Bitcoin at all in like today's world, you should be using Lightning for it rather than doing it on chain. It's just going to be cheaper and faster for you. So when you're looking at actually like integrating the technology itself, it's important to understand like all the important bits of like security and the backups, like all the things of like, is this functionally going to satisfy what I need? And like what Voltage is SOC 2 Type 2 compliant. We've been running this infrastructure longer than anybody else. That technology, the APIs, the integration itself. And that's where we pride ourselves on a lot too, is like being able to actually get all of those benefits out of Lightning. And then also, how do you make sure that the product itself is like kind of ready to go for prime time? Those are the things that I think any business should be indexing on.
Like when you're setting up a new node, now you have to go and pull all the data from the chain, and you have to fill it in and see all those different pieces. So if you're building that, it takes some time. There are benefits of having nodes available that maybe already have a large percentage of the chain already loaded on it. Do it from scratch versus leveraging Voltage. What's the difference in the amount of time it would take to spin those nodes? Hey, Tedd Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious on how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
Looking at hiring a team of 3 to 5, like depending on your scale. So you have to like hire people. Hiring takes a long time. And then you have to actually stand up the infrastructure, understand how that infrastructure functions, and then also monitor it, do all of those things. And then also the liquidity, kind of what you're talking about, in like loading in, basically prepping the node for actually being able to facilitate transactions, connecting it into the broader network, having the liquidity there, the channels. I mean, that takes weeks to do if you're kind of brand new coming at it from ground zero. We get our customers up in like a day. It's usually a few hours and we can have everything up and running and well connected. And so the difference between like hiring a team and figuring out all of this is like weeks, potentially months of time, where we can do it in like a day. And it's a pretty straightforward integration from the API side. Just trying to figure out all this stuff from ground zero is the whole reason why we started the company in the first place, just because it is a big daunting task that really no one should be doing, at least without bouncing off ideas of how would you do this in a reasonable manner.
It's really important to understand like this, it sounds easy. APIs make it look easy, but there's a whole bunch of stuff that goes on in the background that we got to make sure is being done right. And this really is in stablecoins. And there is a lot going on in stables. And really it's changing the way people are looking at.
So it's obvious the demand for stablecoins is there and rapidly increasing as well. And Stripe's kind of new product rollout after their Bridge acquisition to just really bring stablecoins to the forefront of this very large traditional payment processor. Just a really proliferation of stablecoins across the market. Stablecoins are coming onto the Lightning Network here recently, which is both fulfillment of like the prophecy that you mentioned earlier, like they started on Bitcoin, they moved to other chains, and now they're coming back, which is great and exciting. But stablecoins on Lightning versus stablecoins on Ethereum or Tron or whatever it is you want to mention, you can get that speed and scalability and cheap transactions, like I mentioned earlier. But you can do that with stablecoins. So you can transact with a stablecoin in that 0.38 seconds for zero fees, which is like Tron was like kind of the really fast, cheap blockchain to do stablecoin payments on. Now it's starting to get like $6 a transaction, like on top of Tron, and it's getting slower as the network grows. And so we're starting to see a lot of those. It's going to be a big kind of whack-a-mole game of like more usage to a chain. It's going to increase in fees and slowness. And so that's what's different about Lightning is as you bring more activity to it, it doesn't slow down, and it doesn't necessarily mean that there's a bit more fees. And so as we see this proliferation of stablecoin growth, coming to Lightning is the best way for it to continue to grow because of those reasons, chain congestion or high fee environments or anything like that. So that's something we're very excited about, is being able to solve for more use cases outside of stablecoins on top of Lightning, because it's kind of the best of both worlds.
I'm gonna call out Tether, right? So they announced USDT is going to be supported on both. Bitcoin's base layer as well as the Lightning network. That surprised a lot of folks, really, that they were going to go ahead and do that. I think, like you mentioned, it's going to drive the adoption of the stables. How are you seeing the stables grow on the other chain, or are they growing, or are they contracting? What are you seeing happen?
Yeah, I mean, like we've seen like just overall growth in stablecoins. So we see like Tether, they just crossed like 150 billion or something like that, like in their treasuries. And so I mean, they're absolutely growing. I imagine Circle's doing the same. And so we've seen huge amounts of growth in that. We've seen more and more moving into things like Solana and Ethereum, kind of outside of like the Tron was a big dominant chain for stablecoins for a while. I think is losing that dominance. And then there's some newer ones as well. I think that we've definitely seen continued growth inside of the stablecoin market, and more people using them, adopting them. And so I think that is going to be increasingly important. How are we going to support that?
How important is Bitcoin security for companies and institutions where stables are getting issued and moved?
So in these other chains, like the smart contracts have a history of having kind of vulnerabilities or unforeseen problems or things like that people have a very high expectation for Bitcoin in that regard. And then so bringing that into like stablecoin transactions, that's going to be very important to have that trust and security of actually being able to, hey, if you're a Stripe and you're trying to do billions of dollars of stablecoin volume, you want to do it on something that you know is going to be there and not have like, it's interesting in the stablecoin world, just because the dollars that are backing your stablecoin are held by Tether or Circle or something. So you're not like completely free from like any problems. You don't want an additional problem.
There's this new wave of use cases that involve machine to machine. I'll just say it, AI agentic payments and transactions that are just done autonomously. And it looks like things like the Lightning Network and stable coins really become the powerhouse to make these things really happen. What role do you see Voltage playing in that space? And I'm not meaning to ask you what your roadmap is for AI, but I'm kind of asking you, what's your roadmap for AI?
Yeah, I mean, absolutely. I mean, it's AI is similar to stablecoins in that it's this big explosion. You can't deny it. It's here. It's everywhere. And we think that there will be an increasing amount of this AI agent use case. And those are going to be just like as AI agents are able to do more and more things. Payments are obviously something that they're going to need to take on in a more serious way. And there's no better mechanism for doing payments in a AI space than Lightning because of the speed and the low cost, like we've mentioned, continuing to beat that point home because it is very important. So if they're trying to leverage a payment mechanism that is as slow as a blockchain, some of these networks that are out there, it's not going to be able to keep up. Like the AI agent can do things so quickly. We need incredibly fast payments to go alongside that. And so that's where a 0.38 second payment time comes really nicely into play, is that they can do those frequently. They could make thousands of payments a second in certain scenarios. So we need payments that can match the speed of the AI agents, and Lightning is one of the few that can really do that. And so we don't have like a direct kind of product announcement coming up, like, in the next month. Or like the way that our infrastructure is set up, API driven Lightning payments, is very easy to add in these new use cases and be able to leverage our platform for AI agent payment processing. So that's definitely something we're looking at and doing more around, because we do see it as a very interesting and very exciting time to be able to add to that space.
What I want you to do is I want you to maybe go out 3-5 years, just go ahead and time travel for us real quick. Come back and then tell us, what did you see inside of this fun little crystal ball here during that journey?
Increasingly a bigger and bigger crossover in traditional finance and crypto. So I think the bridge, the Stripe Bridge partnership acquisition there is a great example of like a first little look into a view of what is possible in the future, where Stripe just announced like their new products in like 100 in some countries. And like to do an initial launch in over 100 countries is insane. Like that is very rare to be able to do that. It's usually like 3, and then you add in more like as you expand the product. And so I think that there's going to be more and more. And then I think just yesterday, MasterCard is partnering with like MoonPay to do like a stablecoin backed like card. And so we're seeing more and more crossover. Am I wrong on that, or is it?
No, you're completely right. They made that announcement, and every chat room I was in, it was so funny to see the reactions. The diehard digital asset folks, and then the other message boards, the diehard bankers, and then the diehard credit card issuers. Like it was like watching the conversations between all 3 of these areas. Yeah. was comical, because you had the digital assets guys going, oh, this is nothing new, nothing different. Crypto.com has done this. Kraken has a card. MetaMask has a card. They started listing off like all the exchanges and platforms that have a card that allow you to spend off of your wallet. And they started listing all those out. And then the issuing side of the house folks were like, this is so new. We're so excited because now we're finally getting straight to a stable coin. And then we had the traditional bankers that were saying, yes, that's really cool that you've got stable coin. We still have to convert it into US dollars. So it's really so fun, like listening. And I've been in this space long enough, and I've seen all these different pieces, and like, I was like, yeah, that's right. Yeah, that's right. Yeah, that's right. So it was like, no one was wrong in the whole conversation. But I think the really cool part about it is that now we've got these major global networks that are known from the TradFi area that are playing a bigger part every day. And just last month alone, I mean, MasterCard and Kraken made a similar announcement. It just wasn't Visa and Kraken. It was MasterCard and Kraken.
Yeah.
Right. So now you've got both these card brands coming out and saying, we're doing this, we're doing this, we're doing this. I think that in itself tells us we're at a tipping point. We're at this tipping point where the value of these immutable records to move value very quickly and easily in an automated fashion is bigger now than ever.
It used to be that these guys wouldn't agree on anything. They would just be like, that's all dumb. That's all dumb. Like no one would ever actually kind of come and be like, oh, this is actually a cool intersection of this or that or whatever. It was all completely different. And now like everyone has different opinions on it, but we're actually kind of in a conversation with all of these different people that used to just not even be in the same room ever. It's this mesh of the two that I think is going to continue, and it's going to actually open up a lot of new opportunities that we've just never seen before.
Real world assets, digital assets are merging together, which means that all the interfaces that we use to manage traditional and digital assets and anything that holds a value, I consider assets. So I know that doesn't match the SEC and FTC's definition, but what's happening is that those companies that are going to win are the ones that are putting them side by side, making it so that I can transfer, convert back and forth quickly, easily, in a way that makes sense to the everyday person, not just to someone who's crypto native, not just someone who's financially savvy, someone, my mother, or like someone that didn't grow up in the digital age that can look at it and make a decision that benefits them. And I think that's one of the things that we're going to start to see. We've already started to see it. Major financial institutions, whether you notice it or not, if you pay attention, you'll notice that they're buying these little pieces in all these different areas. They may not have figured out how to pull it all together. Let's see what they actually build.
100%. And I think that's what's going to be really, really exciting to see. It's just how all those things click together.
Well, I'm not going to delegate the closing of the episode to you, but I will have to figure out a way to do that sometime in the future. But Graham, really, man, I want to thank you for breaking down what's actually working with Lightning, how Bitcoin is involved in that, how other stables are really paying attention to that piece of it, how Voltage isn't just building tools, you're creating that backbone, and it's making fast payments possible. Let me just highlight something that I think is important for you to know. Bitcoin is truly moving real money. And like I mentioned before, it's $509 million flows through the Lightning channels, with companies cutting payments costs like by 90%. Businesses like Ubank have connected to over 40,000 retail locations. Think about this. Walgreens and CVS, they use some of this infrastructure stuff too. It isn't just about how to drive the price down, and it's not about the price charts when you're looking at Bitcoin. It is about 15% of Coinbase's Bitcoin transactions that are settling via Lightning. And institutions like Fidelity are reporting Lightning's capacity has grown nearly 384% since 2020. And Graham, before we wrap up here, what's the one thing you want people to take away about where Voltage and the Lightning Network are headed next?
My takeaway is just for everyone to go and explore, check it out, like figure out if you are a business owner, how can we incorporate this into our business? What are the ways that we can start looking at using this technology? There is a huge amount of opportunity that we are seeing both for our company as well as the Lightning Network itself that we think is going to be incredibly powerful moving forward. So better to get on that train early than be on it late.
I want to say this. If there's anyone that wants to act on what Graham just said, go ahead, head over to voltage.cloud and see how you can handle your microtransactions similar to what Thunder Games did in over 50 countries. And also look at some of the case studies that they have with BitGo and Unbank on their website as well. Graham, thank you for showing us how all of this works. And when the infrastructure just works, well, that means you've built the pipes that make decentralized finance practical.
Awesome. Yeah, thanks a lot. I appreciate it. Would love anyone to check us out, voltage.cloud. Great to have the conversation today.
Well, folks, that's it for this episode of Web3 with FTC. If this discussion about Web3 got your attention today, that's good, because there's more where that came from. Hit follow on YouTube, Spotify, Apple Podcasts, or wherever you listen. And if you want to stay plugged into everything we're tracking, go to fintechconfidential.com and sign up. That's where all the deeper stuff lives. So be sure to share this with someone who's serious of where fintech is going. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to GetHawk.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.